What's going on, guys? So later on this Asian session, we're going to have two major events. We're going to have Australia CPI data along with the Reserve Bank of New Zealand's rate decision. All right, both of them should be extremely exciting to trade, right? Definitely when, in a private group, trading AUD has been a breeze. Every single time we get labor data, inflation rate decision for Australia, it's been giving us really good opportunities, especially if like we get a good print. You're going to be able to see very volatile moves. Okay, so at 9:30 p.m. Eastern time, we're going to talk with about Australia CPI. Then we're going to look at some tradable ideas. Obviously, the time difference, we got 3 hours for the data or so. Yeah, pretty much 2 hours from it. But price action can change, but just get the idea of what to look forward to in order to take advantage of an opportunity, right? So we can see that Australia's April CPI released, gave an important pivotal moment for the markets. Earlier, the RBA rate decision gave us that dovish tone earlier this month, right? Not only that the RBA cut rates by 25 basis point, bringing the cash rate to 3.85%, but it also revealed that it had a consideration of cutting rates by 50 basis points. That was the real trigger for that weakness in AUD from the rate decision was when the governor had his press conference. And we know like during rate decisions they give clues. And that was the clue that made us and it made the markets want to take advantage of more weakness from a longer term perspective in the AUD currency from a monetary policy reaction, right? Because with them having in that meeting and saying that we was actually talking about cutting rates by 50 basis points, that was a clear overly dovish signal. Typically, we don't really get that from the Federal Reserve. We don't really get that, right? But from them saying that, this is why we have that dovish outlook. Okay. So the central bank downgraded its growth outlook as well, but it also signaled that inflation concerns is also moderate. But this is why we're going to be focusing on the CPI print. And the April CPI forecast showed a modest rise, right, of 0.3% for the month. And I definitely like the idea of this print. So for pretty much you can read the rest. But what we want to pay attention to is I think the best opportunity is going to be weakness. If we could see that CPI comes in lower than a 1.9, right, especially weighted CPI year to year, if we could get that coming in lower, that or lower than the forecast, that's going to be a better opportunity. I made a mistake with above. If we could see that the CPI headline year to year below 2.3 and monthly could be below zero point 0.4, that's going to be the best opportunities that I could see for more weakness in that CPI print. Overall, if we could get a weaker print across the board, I think that should help give us those concerns of a weaker AUD currency. And the opportunities could be GBP AUD buys, or you could look for AUD JPY sells. Okay. If we get a bullish outcome, I think it has to be a massive print where, in order for the markets to actually care, it has to be something massive where weighted CPI has to be above a 2.5%, at least coming at least at a 2.6 or close to 3% in order for the markets to change its bias. I don't want to take advantage of a strong print, but if we see that there's a high enough print, right? You could take advantage of a stronger reaction, but I think it's just going to be quick. And then most likely the overall picture of the dovish, reaction of the RBA is going to be afterwards. So if we get a higher print, you want to take advantage of it. I think it's just going to be a scalp, but that's not what I want to take advantage of. And I suggest if you do see it, take the scalp. You could take advantage of AUD JPY buys, AU buys, or AUD CAD buys, but make sure it's a scalp, right? And then just get out of it if you could grab some pips. Okay, guys. So very, very simple. Stronger CPI, stronger AUD, weaker CPI, weaker AUD. Yeah, this is for the members. Next, we're going to talk about the Reserve Bank of New Zealand's rate decision. Okay, because they're expected to cut rates for the sixth time ever since they started the dovish cycle. So this is already being priced in close to almost 100%, 91%, but you might as well say 100%. Markets is already expecting a 25 basis point cut, right? So the RBNZ, they already talked about uncertainties of inflationary factors because of tariffs. If if we see that tariffs is easing off, right? That also helps the easing of uncertainties when it comes to inflation. So that's why the tariff situation is important for us. Comments from official from the last meeting, they also highlighted downside risk, right? They see further casing of easing. Markets will be watching closely to forward guidance because the last rate decision, they was already giving us ideas of growth uncertainty. They're expecting inflation to lower, right? Growth to also push lower with wages. And this is escalating the reasons for that dovish guidance, right? So now what we want to pay attention to, right? Just to make it simple, we're going to go over the hawkish outlook. If we see, obviously they're going to cut rates, right? If they pause rates, if they leave rates the same, obviously there's NZD buys right away. But if we most likely going to get a 25 basis point cut, then the forward guidance for a stronger NZD currency is going to be really more important because the RBNZ, the Reserve Bank of New Zealand, they're heading close towards their dovish cycle. They're near the end. But if the central bank is confirms that they're at the bottom or they're near at the end of the easing cycle, we're probably going to see a lot of repricing in for a stronger NZD currency after that. Because after they can't cut rates if they feel like we did our job with inflation, we did our job with rates, now we're at a comfortable level, no need for us to cut rates anymore. So they're pretty much going to use forward guidance saying like we're close or near at the bottom. If we get that sort of hint of forward guidance that they're not that they're at the end or near of their easing cycle, I would expect NZD strength out of that. AUD NZD will probably be the best option for sell, right? Because that would give us, we already have a dovish RBA. And then if we could get a hawkish NZD currency, right? That could be good sales for AUD NZD, or you could look for upside for NZD JPY, upside for NZD USD for some buys. Okay. So right here, strength will be caused if the cutting cycle is near an end. So that's what we're going to focus on for that opportunity. Now the dovish outlook. This is pretty much what everybody is expecting. Pretty much, if they cut rates by 50 basis points, I expect like most likely they won't. Uh, but if they cut rates by 50 basis points and that would give automatic weakness at the end. I'm gonna fix this. I made a mistake here, but I'm gonna fix this afterwards. But if they cut rates by 50 basis points, that would give automatic weakness to NZD right away. But be prepared if they surprise us with a 50. Most likely that would hint towards the end of the cutting cycle, and then we could see strength after that. But if we just get a 25, which is priced in, if in order for us to have more confidence and more weakness, we need to see comments stating that inflation is expected to further decline, further cooling on inflation. We need to see growth headlines talking about growth is actually coming down. Labor markets obviously is easing or softening, but the forward guidance has to just give us more expectations of more rate cuts to come, and the market's pricing in more rate cuts. That alone, along with the cut, would give us more downside in NZD pairs. And I think the best option would probably be NZD JPY, NZD USD, and pound NZD buys will probably be the best option moving forward. All right, maybe AUD CAD if we get a strong CPI print, maybe an AUD CAD, AUD NZD Buys could be a good print, but I think those three could be the best option. All right, guys. So what I also want us to talk about now, we're going to be looking at tradable opportunities. Because like obviously like we could start off with NZD, pretty simple. You could just trade one pair if you want to, but we want to see price action range in this sort of fashion because it just makes it a lot easier to look for areas of interest to really focus on, right? So if we're looking at NZD JPY, I want to see this range hold pretty much. Let me just draw it out for you guys. And then look at AUD USD, same sort of price action. It's good that we're getting somewhat of ranging markets before an important rate decision, especially if heading forward towards an important data event. But if we want to get some sales and we get that dovish reaction, if price breaks below 95,700, that would be ideal sales to take advantage of. Same thing for NZD USD. If we get that dovish outlook breaking below that 59,400 area, AUD USD would be a good option pushing lower. And if you want to trade AUD NZD, obviously it'll be breaking above resistance of 1.08400 and NZD JPY, depending on where we are with price action, but you should pretty much get the idea. If we somehow get a weaker NZD currency, I would say good buys would definitely probably be above breaking above resistance. If we could stay above 2.276, that would be those idea buys if we get a weaker NZD currency. So now looking at the opposite, if we could get if we get a hawkish, somehow, some way, we see that they come out hawkish, 86.0 would be good buys for NZD JPY, AUD USD would NZD USD 59,600 would be good buys. And then AUD NZD, right? If we get a strong, I don't like the idea of trading AUD NZD and pound NZD. I'll most likely leave it alone. I think buys would probably just be the first two pairs. Maybe NZD Swiss. You could take some buys if you want to trade a slow moving pair. And eight euro. I like the idea of Euro NZD if we get weaker data. I like Euro NZD breaking above structure because we have the tariff de-escalations, which is positive for Euro. With a weaker NZD, maybe Euro NZD buys, but you could just trade those two top pairs for that. All right, hopefully it makes sense. Just save it, pause it, and just set those alerts so it could be very clear. Now we could look at if like CPI, right? I personally think the best opportunity is going to be a weaker print. So I would want to take advantage of a weaker print from this. I wouldn't want to take advantage of a stronger print, but do what makes you feel comfortable. If we get a stronger print, you could definitely take some scalps out of that, but make sure it's just a scalp. I don't think the overall bias is going to be important. But if we get a weaker NZD, we get a weaker print of CPI. AUD JPY breaking below 92,850. If we could stay below that support, would be some good sells. AUD USD, if we stay below 64,350, would be ideal for sells. And AUD pound, right? If we get a weaker print, once we start breaking above that resistance, I think that would be some good buys. 2.9800. If we could stay above that area, to me, that would be some good buys. And then obviously, if we get weaker CPI, that will cause more rate cuts and that will strengthen the Australia 200 stock market. So that's how you would know if the markets is actually caring about the data. If we see that the stock market is also reacting in a dovish language, in a dovish reaction. If we get higher CPI, we're going to see AUD USD break above 64,600. And then we're going to see AUD JPY holding above 93.0, 93.0.5. I think that would be ideal for those buys. And I wouldn't sell pound AUD. Obviously, if we get a higher print, I don't like that idea, but AUD JPY and AUD USD could be the two best options. All right, guys, hopefully this was helpful. If you guys have any questions, don't hesitate to reach out. And I will see you guys later. Have a good one.